That's it. We just wrapped up another year. 2024 is in the books. And what perspective then do we need to have as we go into 2025? So as we wrapped up December, the markets sold off after reaching an all-time high. But even though the markets were down in December, for the year they were up. I want to step back though and look at the whole year. And actually, I want to look at the year from a perspective standpoint because I get to fill out and update, again, one of my absolute favorite slides. This slide now has 99 years of perspective in it. And so what I want to show you in this slide is how years got categorized based on up or down. And what's interesting to me is if you actually categorized the last 99 years and you just bracketed up between 0 and 10% or down between 0 and 10%, they're tied. And so some people would be like, well, why should I bother investing? You have just as much chance of going up or down in the same direction. What becomes very interesting to me is if we look at the down years of down between 10 and 20% or down more than 20%, there's only a few. And those are the things that we're really worried about, and they happen. And yet what's really the perspective I want to offer when we get away from day to day and even month to month, and we start looking at 12 months and beyond, is look at the up years. The perspective I want to offer is as much as the markets bounce around, for 2024, we just had an extremely positive return that actually aren't that uncommon. No one knows what's going to happen tomorrow, but when we look back at the last 99 years, it gives us confidence to realize no matter how many times the markets may go down in a 12-month cycle, they tend to go up more than they go down. So what do you need to do? You need to make sure in these markets while they're up, you're carving out and setting aside the cash that you need for the expenses that you have for 2025 and maybe even a little for 2026. And one of the things in December that we did is we did that for our clients. It told us what their needs were, and we were pre-planning what those needs are and harvesting when the markets are up the resources that clients need. If you're not retired and you're accumulating, it's just to continue to let that dollar cost average work for your benefit. And if you're dealing with an advisor that basically is getting you caught up in the ups and the downs and the days and the trends and the sell-offs and there's anxiety and there's concerns, why don't you come have a conversation with us and maybe have a different experience in 2025?